Today, we will be talking about Woof, the powerhouse in the pet market, also known as Petco. Now, Petco has recently gone public, but what you may not know is that Petco has gone public before. In fact, this will be the third time that it has gone public since its founding. Now, it isn't quite clear why this keeps on happening, but rumors say that the company owners have been skimming a little off the top, if you know what I mean, leading to less than stellar financial reports and loads of debt. Or perhaps investors have just taken a liking to the market segment, and what a market segment it is. Now, owning a pet has become a trend. So much so, in fact, that Seattle and San Francisco, there are more pets than kids. I bet this is the case in other major metropolitan cities like New York and Houston. So this market segment has two things going for it: the decline in birth rates and incline in pet ownership. A third may be the trend for parents of furry children to raise them like children, sparing no expense to give their child the best, no matter how much it may cost. This has led to the rise of gourmet pet food such as Fresh Pet, which I must say has done exceedingly well for itself. Take a look at the chart here. From a low of around $5.8 in 2016 to now, well, to a high of 185. Oof. Okay. So the market segment itself is booming, but how is Petco doing in it? Well, other brands have taken the lead in online pet stuff retail, most notably Chewy, but also Amazon and Walmart, etc. Petco should still be in the top 5, but definitely not number 1 for pet-related goods. That's a big oof for a company in the pet business, for being in the pet business for as long as it has. Like, they've been around a while. Okay, maybe that's the reason why. So, all right, they don't have the presence, the online presence of other brands, but that's not a problem, right? After all, they started as the pet brick and mortar store. And pets have a lot of physical needs. After all, pets can't be trained over Zoom. They can't get shots over Skype, groomed over Teams, and kept for doggy daycare over Google Chat. And yet, when I think shots, I think a veterinarian. When I think grooming, I think of the hundreds, literally hundreds of small businesses I drive by every day offering those exact services. Doggy daycare as well, but to a lesser extent. So, what does it have going for it? Sure, Petco is in a booming market segment. Financials are okay-ish. But, I mean, they are profitable. They are profitable, unlike some of their competitors, like Chewy. They're only slated to bring in a profit next year. But those are strong competitors that Petco is up against, and they are growing rapidly. In addition to those competitors, they also have many smaller competitors in those individual businesses, those small businesses that are competing for market share. Seeing that, I would suggest for Petco to either open like mini stores or start a franchise out to those small stores, their brand, so that they have an income coming from them, even if it, and it also gets the name out and increases market share. But all of this is kind of letting me lose faith that Petco can innovate enough to beat out their competitors who seem to be constantly growing. But okay, enough of that. Let's take a look at the chart here. What I've done here is a Fibonacci extension, or a retractment, actually. I think it's upside down. But what we see here is that it has broken above the resistance here and is starting to test another resistance. Now, the reason I am using the Fibonacci extension is because I can't see a clear pattern. Perhaps if you bisect the uptrend here, but don't have enough confidence in that. In fact, I think this might be the beginning of a larger trend. So the pattern is not clear at the moment. But if we zoom out, we'll find that Petco does respond well to patterns. If you take a look here, you'll see a nice megaphone pattern. Notice this spike in volume as the direction is decided. Now the megaphone pattern is a continuation pattern. So they are in a downtrend, and the megaphone continues the downtrend. But if we take another look and we draw a line from the wicks, the top of the wicks, we'll see that they intersect this other line from the megaphone pattern at around the same place, actually. So if we draw a line there, it seems this is a strong indication that it is a good support level. And interestingly enough, this line lines up almost perfectly with another line in the Fibonacci retractment extension. Very interesting. Anyway, I personally really like this market segment, the pet segment, but I'm not sure if this is the stock to be in. Analysts have a 12-month rating of around $27. So that's not much upside. I don't know. I think I'll keep looking in this market segment.